Hey everyone, welcome back to Financial Blueprint Diaries. If you're new here, this channel is all about giving you the financial education you never got in school. Today, we're diving deep into something that literally changed my life, financial intelligence. And no, I'm not talking about being good at math or memorizing stock tickers. I'm talking about a fundamental shift in how you think about, earn, manage, and multiply money. Here's a question for you. Why do some people who earn six figures still live paycheck to paycheck, while others earning half that amount retire wealthy? The answer isn't luck. It's financial intelligence. By the end of this video, you're going to understand the 4 pillars of financial intelligence and have a clear action plan to start building yours today. This is the blueprint the wealthy use, and it's available to everyone, including you. So if you're ready to stop working hard for money and start making money work hard for you, smash that like button, hit subscribe, and let's get into it. What is financial intelligence? Let's start with the basics. What exactly is financial intelligence? Financial intelligence is your ability to understand how money works and use that knowledge to build wealth and financial security. It's not just about making money. It's about keeping it, growing it, and making it work for you. Think of it this way. Financial intelligence is to money what emotional intelligence is to relationships. You could be book smart and still struggle financially. You can have a high IQ but a low financial IQ. Robert Kiyosaki, author of Rich Dad, Poor Dad, describes financial intelligence as having 4 main components: accounting, investing, understanding markets, and the law. But I'm going to break this down into 4 pillars that are more practical for where you are right now. Here's the truth most people don't realize. The education system teaches us to be employees, not wealth builders. We're taught to get good grades, find a secure job, and save money in a bank account earning 0.5% interest while inflation eats away at our purchasing power. Financial intelligence flips this script entirely. It teaches you to 1. Understand the difference between assets and liabilities. 2. Make informed investment decisions. 3. Minimize taxes legally. 4. Create multiple income streams. 5. Protect and grow your wealth. The good news? Financial intelligence is a skill, not a talent. That means anyone can learn it, including you. It just requires the right education and consistent application. So let's break down the 4 pillars you need to master. Pillar 1, financial literacy. The first pillar is financial literacy, understanding the language of money. You can't win a game if you don't know the rules, right? Financial literacy means understanding basic concepts like income, expenses, assets, liabilities, cash flow, compound interest, and net worth. Let me break down the most important distinction you need to understand: assets versus liabilities. An asset is anything that puts money in your pocket. A liability is anything that takes money out of your pocket. Sounds simple, but most people get this wrong. Your house. If you're living in it and paying a mortgage, that's a liability. It costs you money every month. A rental property that generates more income than it costs. That's an asset. Your car. Liability. It depreciates and costs you in gas, insurance, and maintenance. Stocks, bonds, and businesses that generate income. Assets. The wealthy focus on acquiring assets. The middle class focuses on acquiring liabilities they think are assets. Here's what financial literacy looks like in practice. Understanding your numbers. You need to know exactly how much you earn, how much you spend, and where every dollar goes. If I asked you right now what your net worth is, could you tell me? Most people can't. Budgeting intelligently. This isn't about restricting yourself. It's about directing your money intentionally. The 50/30/20 rule is a great starting point. 50% for needs, 30% for wants, 20% for savings and investments. Reading financial statements. Whether it's your bank statement, a company's balance sheet, or your own personal financial statement, you need to be able to read and understand these documents. Understanding credit. Your credit score affects everything from loan interest rates to apartment rentals. Financial literacy means knowing how to build and maintain excellent credit while avoiding the debt trap. The bottom line, you can't manage what you don't measure. Financial literacy gives you the measuring tools. Action step. This week, Calculate your net worth. List all your assets and their values, then subtract all your debts. That number, positive or negative, is your starting point. You can't improve what you don't track. Pillar 2, investment intelligence. The second pillar is investment intelligence, making your money multiply. Here's a sobering fact. If you're only saving money and not investing it, you're actually losing money due to inflation. That's right. The safe approach is a guaranteed way to get poorer over time. Investment intelligence means understanding how to put your money to work in assets that grow faster than inflation and generate passive income. Let's talk about the key investment vehicles. The stock market. When you buy stocks, you're buying ownership in companies. Over the long term, the stock market has averaged about 10% annual returns. Through index funds and ETFs, you can own a piece of hundreds or thousands of companies with a single investment. Real estate. Property has created more millionaires than any other investment vehicle. You can invest directly by buying rental properties or indirectly through REITs, real estate investment trusts. Bonds. These are essentially loans you give to governments or corporations. They're lower risk than stocks, but offer lower returns. They're useful for balancing your portfolio. Business and entrepreneurship. Starting or investing in businesses can offer unlimited upside potential. This could be your own business or investing in others' businesses. Alternative investments. This includes things like commodities, cryptocurrency, peer-to-peer lending, and more. These require more specialized knowledge, but can diversify your portfolio. Now, here's what investment intelligence really means. It's not just knowing these options exist. It's understanding risk versus reward, diversification, compound interest, and having a strategy that matches your goals and timeline. The magic of compound interest cannot be overstated. Einstein allegedly called it the eighth wonder of the world. If you invest $500 a month from age 25 to 65 at an average 8% return, you'll have over $1.7 million. Start at 35 instead, and you'll have less than $750,000. That 10-year delay costs you $1 million. Investment intelligence means 1. Starting early, even if it's small amounts. 2. Investing consistently, regardless of market conditions. 3. Understanding your risk tolerance. 4. Diversifying across different asset classes. 5. Thinking long-term and not panicking during market downturns. 6. Continuously educating yourself. Action step. If you're not already investing, open an investment account this week. Start with just $50 or $100 in a low-cost index fund. The amount doesn't matter, building the habit does. Pillar 3, money management. The third pillar is money management, the daily discipline of wealth building. You've probably heard stories of lottery winners or professional athletes who made millions and ended up broke. How does that happen? Lack of money management. Money management is about controlling cash flow, minimizing waste, and maximizing efficiency with every dollar you earn. Here are the core principles. Pay yourself first. Most people pay everyone else. Rent, utilities, credit cards. Then save or invest whatever's left. Financially intelligent people reverse this. The moment you get paid, 20 to 30% goes straight to savings and investments. You live on the rest. The multiple bank account system. Have separate accounts for different purposes. A checking account for bills, a spending account for daily expenses, an emergency fund, and investment accounts. This creates automatic discipline. Eliminate bad debt. Leverage good debt. Credit card debt at 20% interest? That's killing your wealth. Pay it off aggressively. A mortgage at 4% on a rental property generating income? That's leverage, using other people's money to build your wealth. Build an emergency fund. Before you invest heavily, you need 3 to 6 months of expenses in a liquid savings account. This prevents you from going into debt when unexpected expenses arise. Automate everything. Automate your savings, investments, and bill payments. This removes emotion and willpower from the equation. Your money goes where it should before you can spend it elsewhere. Track and optimize your spending. Use apps or spreadsheets to see where every dollar goes. You'll be shocked at how much money leaks away on subscriptions you don't use, impulse purchases, and daily coffee runs. Increase your income streams. Money management isn't just about cutting expenses, it's about growing the pie. The wealthy typically have 7 income streams. Start thinking about side hustles, passive income, and skill development that increases your earning power. Here's a mindset shift. Wealthy people view money as a tool and an employee. Every dollar should have a job, whether that's growing through investments, protecting you through insurance, or bringing you joy through experiences. Action step. Set up automatic transfers so that the day after you get paid, 20% automatically moves to your investment or savings account. Out of sight, out of mind into wealth. Pillar 4. Risk intelligence. The fourth pillar is risk intelligence, protecting what you've built. A lot of people focus entirely on making money, but ignore protecting it. That's like building a house without a roof. One storm, and everything you work for is gone. Risk intelligence means understanding, assessing, and mitigating financial risks that could derail your wealth-building journey. Here are the key areas. Insurance. This is your financial safety net. You need health insurance to protect against medical bankruptcy, life insurance if anyone depends on your income, disability insurance to protect your earning power, and property insurance to protect your assets. Yes, insurance costs money, but one uninsured catastrophe can wipe out decades of savings. Diversification. Never put all your eggs in one basket. Spread your investments across different asset classes, industries, and even countries. If one investment fails, you don't lose everything. Legal protection. As your wealth grows, you need to think about asset protection strategies. This might include setting up LLCs for businesses or rental properties, having proper estate planning documents like wills and trusts, and understanding tax strategies to keep more of what you earn. Emergency preparedness. Beyond your emergency fund, have backup plans. What if you lost your job? What if a tenant stopped paying rent? What if the stock market crashed 50%? Risk intelligence means having contingency plans, avoiding scams and bad investments. If something sounds too good to be true, it probably is. Risk intelligence means doing due diligence, asking questions, and walking away from opportunities you don't understand. Tax efficiency. Taxes are your biggest expense over a lifetime. Risk intelligence means understanding legal ways to minimize taxes through retirement accounts, tax loss harvesting, strategic charitable giving, and proper business structures. Here's the thing about risk. You can't eliminate it entirely, nor should you want to. No risk means no reward. But intelligent risk-taking is calculated. You understand what you could lose, you've minimized unnecessary risks, and you're compensated appropriately for the risks you do take. Action step. Review your insurance coverage this month. Are there gaps? Do you have an emergency fund? If not, make building one your top priority before aggressive investing. Action steps you can take today. All right, let's bring this all together with concrete steps you can take right now to start building your financial intelligence. Step 1. Calculate your net worth today. Assets minus liabilities. This is your baseline. Step 2. Set up a budget or spending tracker. You need to know where your money is going. Use apps like Mint, Enab, or even a simple spreadsheet. Step 3. Automate your savings. Set up automatic transfers of at least 20% of your income to savings or investment accounts. Step 4. Open an investment account if you don't have one. Start with a low-cost index fund through platforms like Vanguard, Fidelity, or even Robinhood. Step 5. Educate yourself continuously. Read one personal finance book this month. I recommend Rich Dad Poor Dad, The Millionaire Next Door, or The Simple Path to Wealth. Step 6. Review your insurance and emergency fund. Make sure you're protected against major risks. Step 7. Find a community. Surround yourself with people on the same journey. Whether that's this YouTube channel, a local investment club, or financial podcasts, your network affects your net worth. Remember, financial intelligence isn't built overnight. It's a skill you develop over years through education, experience, and consistent action. Every wealthy person started where you are now. The difference is they took action and stayed committed. The best time to start was 10 years ago. The second best time is right now, today. So there you have it. The 4 pillars of financial intelligence: financial literacy, investment intelligence, money management, and risk intelligence. Master these, and you'll have the blueprint to build lasting wealth regardless of your current income or situation. If this video added value to your life, hit that like button and subscribe to Financial Blueprint Diaries for more content like this. Drop a comment below and tell me which pillar you're working on first, or if you have questions about anything we covered. Remember, financial freedom isn't about being rich, it's about having choices. It's about security, peace of mind, and the ability to live life on your terms. You've got this. I'll see you in the next video. Until then, stay financially intelligent.